Hey traders, this is Christian from Tribeca Trade Group, and it is the end of day, end of week video for Friday, March 5th, and a pretty uneventful day. It was quiet, all day today. I was just kidding. Pretty dramatic price action, and yeah, something I guess for everybody today. Volatility. So where did we get to in the VIX today? We got up to about a 29.90, and we managed to close around 24.60. So why don't we look at the VIX first? And we'll go through a bunch of things today in today's video. But here's how this looks. I mean, it's pretty crazy that this week felt like there was a lot of volatility, and 30, while is a high level for the VIX, we got to a higher level actually, at the end of January. So we are back below the 200-day moving average, which is pretty good. I think there was more volatility in Nasdaq stocks, but you could see too, this didn't get as high as where we were back at the end of January. So, kind of interesting how this whole thing kind of transpired this week. And but if we go back to the end of January, yeah, the volatility was actually a little bit higher here, and fear, when you looked at things like the fear and greed index and so forth, they actually got to the level of fear, which I think there's things like, if you look at the components of the CNN Fear and Greed Index, I think like the put call ratio is in there, and I think the VIX is one of the components of that model. But so it felt kind of damaging, and perhaps that this was just kind of a wearing down type move the last couple weeks. I mean, the longer that these things kind of go on for, it kind of it kind of just eats away at you, and it feels pretty bad. But the VIX just did not get to that ultimate high level. So I think the $1 million question will be, from everybody, is was this it? Will we begin to recover? And I think one day doesn't make a trend, but there's some good things here. One of the things that I've had written down here, under on my checklist, right? Maybe we'll put this in yellow or something. Whoops, no, that's the wrong. Let's put that in yellow over here. There we go. Right, is that the VIX needed to get back below 25. We're at 24.66. Breadth did improve, right? Breadth was negative all day long. I don't want to say all day long, but till about 12 o'clock, and that turned the corner. So that's good. So I think ultimately we saw a lot of good things today, and I think just remember one day is not a trend, and we'll kind of see how this develops next week. But all in all, I think normally over the course of a pullback, what tends to happen is always, and this is easier said than done, if you can kind of remain somewhat on the sidelines, or have a nice position of cash, what you'll find is once you start to get out of these pullbacks, you're going to find some really good buying opportunities. So we'll be doing that this weekend. We'll be going through a lot of charts, and I started to do that yesterday on the weekly side, right? Going through weekly charts and saying, hey, things are pulling back to a level that's starting to become pretty attractive in some areas of the market. So we'll just kind of have to watch how that goes, and we'll have a strategy for that next week. A lot of times for me, it's the strategy of kind of scaling into some things, and realizing where your support level is, where it's not going to work, right, and establishing those things on the onset of the trade. Right, I had a lot of trades this week that I took a stab at, and they didn't work, and I stopped myself out, and there was a lot of those paper cuts, right, and deep paper cuts this week, because it happened to me a number of times, and I tell you, it's part of trading. So let's talk about that for a second, right? Let's talk it's part of trading bit. If you're newer to trading, and it has been great to see so many new traders get involved, right? But I'll tell you what, like this type of thing, it happens a couple times a year, and you have to kind of get comfortable with that. So it's not so much like, sometimes when these things happen, there's a tendency for some of the new retail traders to say, this is this the institutions messing around with the retail traders? No, it's really just what happens in markets every, as a lot around this time of year, March, and end of February, March, we typically do get a pullback, right? And you can look at things like the Stock Traders Almanac, and there's a lot of data on that. You just have to do, you have to go through and you have to research it a bit, because there's so many, I think, on Twitter that have a tendency to that are not doing research, right? That are just basically saying, oh, this market is rigged, it's not fair, da 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 da. Um, there's a lot of things that are not fair, but I could tell you these types of pullbacks, they happen. It's just the part of trading. And so far, I mean, I have to say, if this is all we get, it's not that bad. It's not. But there's also, I'll tell you a couple other things that I've seen. Too many comparisons to, and this happens every time we pull back. People overlay a chart of a market crash and think that there we go, this is going to be 1987, this is going to be 2000, this is going to be 2008. I could tell you that I've seen these comparisons over and over and over and over and over every time there's a pullback. And I'll tell you what, there's only been three. You could put last year in that category too, because that was a major pullback too. But it really, market crashes like that, they do not occur often. Knock on wood. I don't want to see that happen. And the best thing that I can kind of tell you is watch your levels and trade discipline, right? You don't have to worry about if this pullback could be a crash, if you're taking risk off at the appropriate time, right? So these are things to learn as a trader, and really the more experience you have, you do get used to actually having to take off some trades for a loss, right? And sitting and watching and being patient. These are things that really good experienced traders do, and you just kind of have to get used to that. And so if we were to kind of break a lot lower here, right? And if you do that, if you kind of take some of those losses and take some of those off your balance sheet, you don't have to worry about what goes down here, right? And then you can kind of, if that were to happen, then you can kind of wait for that to happen and be ready to kind of deploy some more capital, right? Or did what I did a couple times this week. I tried to trade a couple things at the 50-day moving average. They didn't hold, and I had a bail on it, right? So those are going to cost me on some trades. When you're trading against a support level and it doesn't hold and you break through it, you unwind it, and the unwind is going to be a bit of a loss. But you live to fight another day every single time, right? And that's the name of the game. So keep that in mind. Pullbacks happen. Usually sometimes two, sometimes three times. And, take a look at, rather than look at like market crashes, right? And try to say, is this going to be the big one? Take a look at some of the other pullbacks that we've had recently. For example, the one in September, right? This was painful, right? And this lasted basically for a whole month, right? And we did claw our way back a couple times, only to give it up. Right, so you have to remain disciplined, right? We can think and we can make predictions and all that, but honestly, again, nobody knows. Nobody really knows how long a pullback is going to be until it's over with. And so I'll say the same thing, but it's just trading and something that you get used to over time. Now, the one thing that I do feel, particularly bad for some of the newer traders, because I think a lot of them really got wrapped up in very high growth names. And the way that works with high growth names and names that trade on very high valuations is that as long as the story is intact and nothing structurally changes, they enjoyed a very long time of a rally, right? And two things happened this week. Number one, the country's reopening, so a lot of these trades that have been partially have done so well is because of the country's been in lockdown, which we went over all this during these videos this week, and I would say I spent a good time talking about, the repricing of growth, right? And you could watch, I think that was Wednesday's video. So take a look at that if you have time, because I really walked through some examples of what the repricing of growth, looks like. We talked a lot about price to sales ratios and things like that. And then number two, not only was that going on, but interest rates were going higher, right? And that caused, a bit of a snafu, right, when interest rates start moving up like that. Ryan Dietrich put out a great note. If I can find it, I will quickly. I should have had this up already, but he put out a great note, and these are the things to be mindful. Is that sometimes there's an initial reaction, right, which is what we got this week, where especially growth high multiple names got hit harder, right? But over time, right, rising rates can actually be very bullish for stocks. So it's important to look at these numbers, and it's important to understand certain groups are going to act different ways. Some names that were very high valuation got hit harder than other names. So if you happen to be in all of those names, there was some other great notes out by a couple pure growth investors saying, hey, I expect, and I think Peru, who is a big follow on Twitter, said, hey, I'm used to volatility in my portfolio. Because I'm taking higher risk by going into all growth names, I'm aware that I'm going to have a big drawdown from time to time, right? So he gets it. And so you are taking higher risk when you do things like that, right? When you're all in exceptionally high growth names, they're going to be more volatile, right? That's just how it works, and you have to be okay with that type of risk. And I think what happened over the last 2 weeks is a lot of investors just were not familiar with that concept, that high growth means higher risk, right? Higher return, but higher risk too, right? Higher returns do not come free, right? So, we've seen a number of people have very great performance over the last 6 months because it's worked really well. But at some point, there's going to be volatility and there's going to be drawdowns. And drawdowns are not fun. Right? Having big drawdowns like that, like I said, it's a part of trading, and it's not fun. Also pullbacks, right? We hear this a lot of times too. Oh, if I only had a pullback, I would buy. I would da 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 da. Right? But I can tell you, every time we have these pullbacks, right, they're never relaxing, right? They're never easy. It's not because of like, oh, the market's just going down a little bit, right? It's it's look out. The market's really going down fast, and I think that's what we got a little bit today. So let's talk about the indices, and we'll talk about this week's performance. But let's start there. And what I find pretty interesting is, it was a monster comeback day, right? We explored the lows of yesterday, right? So if we break this down on a 5-minute chart. Right, we did not break value for the day in the S&P. Right, so we got very close to it. It felt like we broke through it, but we didn't. We actually made a little bit of a higher low here, which is good. Now we rallied all the way up to this virgin point of control. That was kind of the target that we were going over in the at the end of the day in the room. There's some heavy buying going on. Big MOC to buy today. So that's how the S&P looked. Right, and if we switch back here, I don't think there's anything crazy on the 1-hour chart. But if we switch back to the daily chart, two things happened here. We closed back inside value. We closed back above the 50-day moving average. So I was talking about how we were in some of these indices, we were kind of in no man's land. Well, now we're back inside. So you've got some things to watch. So when Monday morning comes, right? And if by the end of the day, if we close back below the 50-day moving average, then that, hey, you got to be a little bit more patient and watch the size of trades that you're putting on. Also, I'll say this too. Review your portfolio the last 2 weeks. What did you get hit on the most? I think a lot of times with newer traders who are trading options, it's option positions. Why? Because they're just you have too many option positions on a lot of times. That can cause a lot of volatility in your portfolio, right? And too many short-term options, right? I'll tell you what, if you're only trading options and there's a case of volatility, you could have a chance that you'll have more than a normal drawdown, right? Because options are very volatile, right? And somebody should give a warning label, right? When they talk about, potential profits in options, the short-term options, right? You have to be comfortable at all times if you're trading anything within 60 days expiration of losing the whole premium on the option, because that's how short-term options work. They're extremely volatile, right? And I think too many traders try to think that they can swing trade short-term options. That's what you'll find over time is that if the market doesn't go straight up, you're in big trouble. Trying to trade a lot of options. It's just the mechanics of options. It's not because you're a bad trader. It's because you're using options the wrong way, and it takes a while to figure that out. It took me a while to figure that out as a retail trader. But it's a learning process, and if you don't figure that out, it'll be figured out for you with trading options. Right? So options are nice for taking a shot on something, for doing some day trades, but swing trading short-term options, if the market does not go in your favor and go in your favor fast, it usually ends up leading to losses, right? Because you can't use chart stops. It just doesn't work. And I won't go into that in a video, but we have a video on that at the Tribeca Trade Group. All right, so that's going to be some things, easy stuff to watch in the beginning of next week, right? You don't have to sit and say, oh my God, is the bottom in, and so forth. You gotta put your big girl pants on and say, hey, if we break back below the 50-day moving average, reduce your risk again, right? And you might get whipsawed a little bit. All right, let's talk about the Qs. All right, sorry to go over this for so long, but this is important stuff. This makes or breaks whether or not you end up being, a profitable trader or not, based on your discipline and your plan, not emotion. Okay, so the Qs are more of a work in progress, right? I've talked about how there's this level down here at 291, right? Now, we don't have to take this out. And that's the closer that we get to it, the more worried that I get that, we're going to get down to the 289, 291 level. But we came off of this nicely. However, we really haven't taken back anything technically in the Qs. So, I started to see this morning that things like Microsoft and Google, were holding up a bit better. But we had this, we did have this washout, right? We did break the week's lows, and it was really nice. We had this big hammer bar, and we just kind of continued, and it felt like a washout, but I really didn't do anything until we got back inside value. I was waiting for confirmation because I have seen too many of these bounces, right? And if you follow this in the morning, right, every time that we tried to turn, again, you just had to wait until there was the washout, right? Which we got around 11:30, right? But if you're fighting with these 5-minute bars, right, and thinking, like, it's really tough because you see a green bar and you're like, hey, we're going to turn, and then the next one just completely collapses it out, right? So you really just, the more patient that you can be and waiting for the turn, so what I did was, once we got inside value, I started to right around, and I got stopped out of some things. I got stopped out of DraftKings absolutely at the worst time, right? And I got out of Deer. I was in from yesterday. I took one target on it, but then I went right back into it. I waited, and you could see I got in $4 higher, but that's called, just waiting for some confirmation. Right, so that was 12 o'clock, right? So that was when we did go, once we got into value and like back tested here and held, I was a little bit more confident that we were onto something for the day. All right. So as I said right in the beginning of the day, this one day is not a trend, right? So, I do like that we did make a little bit of headway, right, in terms of turning the corner, but I would not, get convinced that the bottom in the Qs is completely, in yet, right? Until you just see more confirmation. So what would more confirmation look like? Well, like we went over with the S&P chart, back inside value, a move above the 50-day moving average. Note that we didn't even take back the 5-day moving average. So be mindful of that, right? We did not really take back too much today, okay? So be mindful of your high growth names. If we look at the weekly chart, right, I've mentioned this 289 level, so it's good. We got back above this 20 period moving average. So again, I would just kind of take it as one day is not a trend, and let's see if we can build on the low from what we carved out this morning. I think it's constructive. I do, but I think that we just want to make sure that we start retaking some levels, right? Like the 5 period moving average, which is this one that I've got here. That's really what I like to see, because you could see we're still in a downtrend. Even really nice bounce, really nice, carved out that low, but now we need to see like a what's it called, morning star type pattern. So we'll see, and I think if you start to look at individual names, you're going to find some things that you may like. But right, and if we look at the diamonds too, right, look at how well these held up. So again, there might be certain groups that are going to lead us higher, right, and they just may not be the ones that were very popular a couple weeks ago. I think you just have to be a little bit more selective in high growth right now. But yeah, you look at the diamonds and no breakdown, right? And I was talking about a couple names, like, joking around. There's certain names that look pretty darn good, right? Look at Expedia. No pullback at all, just sideways, right? And basically, closed right around the highs of the day. So, these are the things that we're going to be looking for. Somebody brought to my attention too, Tribeca Trade Group member brought to my attention Polaris. Right, also very strong, right? So there's some strength out there, but be open to what names and what groups are showing that. Let's talk a little bit about the ARK ETF, right? So this thing, has been the focal point this week, right? We've heard a lot about this, a lot of put buying going on. Interesting where this got to, right? So there's a lot of these virgin point of controls. We did tag this one perfectly, right? We took out this one. This still finished down on the day, by the way. But we took this one out at 106, and we got up to 117. Now, take a look at the weekly chart. This 106 level is a pretty significant level. Right? That's the top of value for the week. So I would be paying attention to that. But hey, this is what's called, the TTG MarketWebs indicator, value areas. And again, you have to turn on, these go by volume at price, right? So if we turn on the profile, right, you're going to see what I mean, right? So this volume that occurred last year in the ARK ETF, ARK Innovation ETF, right? If we put a statistical level around this volume profile, right, here's the value area that you get, right, based on 2020. Right, so this is a significant level, right? And I know some people try to trade off the volume profile, but if you put some statistics, and I can't tell you our secret sauce, but if you put some statistics around it, right, this is what is significant. 106 down to 43. Right, and we tagged that perfectly. 106. So that's going to be the tradable low versus this, and I think it'll be interesting to watch. I don't have a position in this, but I'm watching. I think it's interesting. Okay, so that's number one. well, not number one. We're 24 minutes into the video, but I think that's something really interesting to take hold of, right? So what else? Well, I thought the home builders were pretty interesting today, right? When you start to look at these weekly charts, right? So XLV is something of interest too. This is the healthcare ETF, right? If value is going to stay in vogue for a little bit, maybe healthcare might be an area to take a look at. All right, so 110 has been held. All right, and this is what the XLV ETF looks like. Also, the home builders. Right, if we go and if we look at the daily chart, right, we held value, we held the 50-day moving average, big bounce because maybe the softness in interest rates today helped a little bit. TLT was actually green on the day. All right, but if you look at the weekly chart, we held the trend, we held top of value, and that level is 59.50. Sorry, 59.90. Excuse me. Also XHB. Which has a little bit more building materials retail exposure in it. That held up well as well. All right, so there'll be a lot more charts to go through, guys. We're going to be doing that in the TTG weekend videos. We put out 2, and there'll be a lot of analysis to go through this week, right? And there's going to be names like Expedia that held up pretty well. There's one, this CALX, right, which is a software name that held the top of value. I mean, look at the range on this thing today, right? Went all the way down to 35, right? So right now, like, this is one of the best software names I see on my charts. So, another one that I've been watching is apps, but it didn't bounce as much as I wanted it. It's still down 6%. So this might be more of a work in progress. You want to see these names really come back, and down 6% is tough. Google was strong today, up 3% for the day. Got close to this 1-hour VPOC being taken out. I traded some Taiwan Semiconductor today. There were some calls in this. Still, it's got work to do, right? Still below the 50-day moving average. Micron was busy in this area. I also saw some NVIDIA calls go up. So Micron holding up better. Western Digital holding up better. So I took a shot at this. This NVIDIA held the 200-day moving average. I put on a small call spread for next week. See if this thing can bounce a little bit more. All right, guys, so we'll end it there. I'll just show you, I didn't really get too much into the performance for the day. But again, energy, very strong again. Metals and mining were strong today, too. Consumer staples, strong. All right, so you got to take this one day at a time. The way that I'm going to be looking at this is try to understand what names might be showing relative strength. I would not go back to the exact same playbook of what you were doing a month ago, right? I would go through and figure out what names are going to come out of this dip with market leadership, right? And that's the names that we're going to want to go after, right? Not the same names that were popular 2 months ago. If they happen to show relative strength and a signal, I'm all about them. Right? I'm open-minded to those possibilities. But I think that you have to change your game a little bit if you were all in growth a month or 2 ago, right? That may not be where all the opportunities are going forward. So you have to make those adjustments, okay? And having a name, one of the names that I traded this week was Deere. Deere found the top of value and bounced pretty nicely. It was up 3.5% today. Right, and I added to that one yesterday, and thankfully it worked out because it was one of my bigger positions. All right, guys. So that's it. Great day. Nice way to end a week. And if you're new, or doesn't matter what your level is, all these pullbacks, they're never easy, right? I always lose a little money during them. I understand the process. I try to get better at it every time and not, try not to lose as much, try not to do too much damage. But they're difficult times, right? All right, guys, have a great night. Have a great weekend, guys. And if you like this analysis, I say it a lot. Go here and check out how to be a member of Tribeca Trade Group. I really try to do a lot of hand holding with newer members and get them up to speed, and try to help out. Like we were talking last night in the trading room, at about 10 o'clock last night, I shot a video about how I got stopped out on PayPal, why I got stopped out in PayPal, and why I was okay with it, right? And some other thing, other analysis. So, I really try to help traders get to the point where they're a bit more comfortable and to understand some of these things, and how they're quite normal and part of the process, right, of what we've been experiencing the last 2 weeks. Okay, guys, enjoy your weekend, and I'll see you guys on Sunday for the two videos. Again, kind of excited to go through a bunch of charts, but here's what you get with your membership, right? A lot of stuff. And by the way, our community, geez, great teamwork this week, right? And really helped out. We all helped each other out, right? And that's what it's all about. Thank you, guys.